I think there was a lot of talk about decoupling, but we haven't really seen that yet in the numbers. It's really difficult for companies to diversify their supply chain and their supply from China. And there's also a lot of consumer goods where there's not a big alternative and where it's still very cheap to procure them from China. And it's very difficult here also for consumers and for merchants to really decouple. The investment opportunities are still there as China still grows significantly faster than many advanced economies. And the question here is really, will it be able to keep up this pace? And at which point do all this export restriction and all this geopolitical tension that we see really impede this trade that we see between the US and China?
Many China experts have called the latest move out of China to restrict the export of critical metals as a warning shot, not a death threat, not a major blow, but a warning shot to the United States and to other Western economies. If it is a warning shot and we do see the situation escalate from here, what might China target next in the chip war?
So in the chip war itself, it is a bit difficult for China really to enact this type of export controls. So far, China has only announced export controls. We don't know quite yet how it tends to use them. But the problem is that China is in many ways the end of the chip supply chain, means it is dependent on the global supply of chips. And if it would really impose severe restriction on supply of materials, it would cut itself off to some extent of this supply. So the question here is a little bit, is on the one hand, to which extent is this just signaling, or do they have figured out a way they can target this specifically on important industries that are politically important, for instance, in the United States, without harming their own supply? Well, the other question is how it intends to use the same type of controls on areas where it might be less harmful to itself. And the key part here is, for instance, materials for building batteries, critical rare earths, for instance, or other materials like lithium, where a lot of them are refined in China itself. And here the challenge is much bigger. Most of the refining of many of these materials happens in China, and it will be difficult in the short term to diversify. However, imposing this restriction means that there's a lot of signals for businesses to diversify in the long term, and given that we have to build a lot more supplies, we probably will see more diversification going forward.